Hello everyone, good evening and welcome to North Star. Today in this lecture we are going to start with section 2B, Corporate Finance. Now before I get started with today's section, let me very briefly introduce myself. My name is M. Irfat. I am a chartered accountant, I am a CMA, I am a CPA, I am CMA UK. In addition, I hold multiple other qualifications in finance, accounting, management accounting and taxation. I've been training students almost all my life. It's been more than 2 decades that I have been training students, and I took it up as my in fact I took my passion as my profession. In addition to teaching, yes, I was working. I've worked almost 10 years of my life. I was with the corporate world, worked with some of the largest MNCs in the world, with consulting firms as well, and then I hang my boots because I always believe that teaching is my calling. And a point came in my life when I decided that this is what I want to do, because I love doing this for 2 reasons. I am happy doing this, and I can create lot more success stories in my life, something that I can cherish during the end of my life. So I took it as a passion, and I'm glad that I've been able to do remarkable with lakhs of students that I have trained so far, created I don't know how many chartered accountants in my life, created how many CPAs in my life, created how many CMAs in my life who are all doing amazing today. When I look back, I think this is something that I am super proud of, creating or contributing to the creation of the legacy of some of the finest professionals like you. Your journey is going to be beginning today, but I can tell you, when you look back to the day today, I'm sure you'll be super proud of this journey, because I'm not going to teach you, not at all. I don't believe in teaching at all. Then what are we going to do? I believe in enjoying together. And in the process, I can tell you, in the process, you will learn crazy things. I am not going to be teaching. So don't come to the class because there is a class and there is a teaching. No. Come to the class with a lot of excitement. We are going to have a lot of fun. It's an open forum. You can tell me anything you feel like. I'll share a lot of experiences with you. We can laugh together. We can, take out all the frustrations together in the class and enjoy. The objective of this class is to ensure that learning can still be fun. All right. So these classes are going to be technically ranged between 1.5 hours to 2.5 hours. But that does not mean every day I'm going to teach you 2.5 hours or every day I'm going to teach you 1.5 hours. No, we are always going to go with the flow. If the chapter is very boring, we may wrap up a little early. If the chapter is exciting, we'll continue till we can stretch ourselves. I want you to keep in mind that the class is for 2.5 hours. All right. I want you to keep that in mind so that you don't have any other engagement. But on a case-to-case basis, when I'm taking up a very boring, dry topic, maybe I will wrap up a little early so that you are able to focus till you are able to focus. There's no point me finishing the syllabus without you coming on board with me, without you enjoying, without you understanding, without you participating in it with me. All right, so objective here is not to finish anything. The objective here is to travel this beautiful journey of knowledge and excitement. So I am not going to be in a rush at any point in time, because my objective is to ensure that we are walking together, because we have to walk far. There's a saying, if you want to walk fast, walk alone. If you want to walk long, then walk together. And we are going to be walking together because it's a very long journey from ABC of finance to the XYZ of finance. And I'm not just going to be focusing on your exam. I'm going to be always going way beyond your exam, because I want to create very brilliant finance professionals who understand finance like never before, who understands finance like nobody else. That's an objective that I am having in my mind. So at no point in time I'm going to be sticking to your exam and say, okay, this is what is covered in exam and this is what you need to know. I will always go beyond exam, because passing exam is just one part of this journey. But creating professional with excellent knowledge, understanding and conceptual clarity is what is the bigger picture that I will always be focusing upon. I want you to be aligned in this objective. And I'm sure you have made up your mind to travel with me. And that's why you're here, right? That's why you chose me, you chose North Star. And I'm glad that you did this, because there are thousands and thousands of students who we have been seeing, they will join somewhere else and then they will waste so much of money and then again join North Star. That's a lot of money wastage, which I don't know, but it happens. And we have seen that I don't know how many times and with how many students. I can tell you this journey is going to be super exciting and you are going to experience it yourself from day one of the class, right from today. All right. Now, couple of things that I want to keep you informed about. First is I want you to be sitting possibly with your laptop where WhatsApp should not be integrated or WhatsApp should not be on your laptop. I don't want any of you to be sitting with the laptop and with WhatsApp on in it, because that will create a lot of distractions for you. So this is a strict expectation that no WhatsApp in between the class if you are watching from your laptop as well. If you are watching from your mobile, then I would appreciate that you move to laptop or computer. Refrain from attending the classes from your mobile phone, because you will have massive amount of distractions. You will have WhatsApp, you'll have emails, you'll have, I don't know, Instagram, you'll have so many notifications that you will not be able to keep track of. All right. So, and of course, phone call. How can I forget that? Even if you mute the phone, still phone call will come, right? Yes. So I want you to avoid it. But in case you have no other option, it's okay. As long as you are having an option, go for it. In case you don't have an option, it's perfectly fine. Second thing is I want you to have the book and a notebook with you, because I'll tell you what to write, what not to write. I generally avoid writing while I'm teaching, because our brain does not function in a dissected manner, that you are writing also, you are listening also, you are understanding also. No. When you are writing, you are not listening, you are hearing me. And hearing is a passive activity. Listening is an active mode. Hearing, somewhere distant, some song is being played, you are able to still hear it. You have not closed your ears, right? You are still hearing it. But are you listening to it? May not be. So I want you to listen to me, not hear me. So while I'm speaking, avoid writing something. Whenever I feel it is important that you should make a note of it, I will stop and I will tell you, write it down. In the book, try to write as many things as possible in the book. Make the book as dirty as possible. It is your book after all. You have every right to create story, so that when you 20 years down the line, when your children grow up and when they want to see how my parents were studying and working hard to give them a beautiful career, they see those hard work that you have been putting all these while. Because the next generation also needs to understand what sacrifices you have been doing and you have done to give them a better life, a better opportunity. So don't hesitate from documenting your struggle, your hard work, your sacrifices, because this is a beautiful story that you are creating for the next generation, and to demonstrate your sacrifices, your struggle and your success. So all in all, let's work hard. Let's take that or make that promises to ourselves that we are going to work hard, we are going to struggle, we are going to sacrifice, because we are writing a beautiful story about ourselves. Because tomorrow a day will come when you will tell your story to your children, and they should be proud of who you are. They should be mesmerized with your journey of struggle and sacrifices. And you can't create that out of nowhere. You have to live that to share that. I want all of you to be in line, aligned with this, and I can tell you success is just inevitable. Success is going to be yours, and we will make it happen right from day one. All right. I want everyone to write in the comment section, I promise. Everyone, I want hundreds and thousands of promises from all of you that we are going to be doing this together from day one. Awesome. I can see so many. I can see so many. I am so excited. I am so excited. Now let's jump in. And before I jump in, let me tell you, I'm not going to go in the sequence of A, B, C, D, E, F. No, I'm not going to go in the sequence. I will go in the sequence in which I believe you will understand better, your retention will be better, your productivity will be better, and that is the sequence that I am going to follow. Don't ask me, sir, please can you do this, I am going to do something which I believe is going to be best for all of you. Alright, so this is something that I want to tell you. Carry a book, carry a red pen, because whatever I am going to ask you to mark, whatever I am going to ask you to write down, please ensure that you are writing with a red color pen, because that way you will understand the importance of this, because it is coming right from me. Anything that you feel is important or you want to write for yourself, then you can use either a blue color pen or a black color pen as per your preference. But whatever I am telling you to write, please ensure that you are using a red color pen, because that will create a difference while you are revising what you are revising. How many revisions are required? All that as we progress, I will keep telling you. All right. Will we have an introduction session? Answer is yes. We are also going to have an introduction session. We are also going to have a LinkedIn session. We'll also have a lot more sessions as we progress. All right. But during the course, we are going to be doing all of it. Sometime we may be very exhausted. Oh my God, so big, so much to study. During that time, I will use those opportunity to do something different than studies, because I want a 360-degree professional out of you. Somebody who comes out of North Star, you should be smart enough to be able to dominate, rule the world of finance. Of course, just out of it, you are not going to be, but yes, your journey will at least begin from there. All right, let's get started with section 2B, corporate finance. So this is one of the most important section in your topic, because here we are going to be talking about finance for the corporate. Corporate means the entities, the companies, right? At that level we are going to be talking about. It's one of the most important section in your syllabus, because it carries 20% weightage. That's a lot of weightage, and is the biggest section in your part 2 syllabus. All the big things we will try to cover up early, smaller things we'll cover up as we progress. And this section, the biggest section in your syllabus, carries 6 topics. All right, so topic 1, we have financial risk and return, a simple, easy topic. Then we have a long-term financial management, a very big topic. We will take a lot of time covering this topic. Then we have raising capital, a simple, easy, theoretical topic. Then we have a working capital management, a very important topic from exam point of view and from real life perspective also. We are going to go deep into this topic. Then we have corporate structuring, a very dry, boring topic, but a very small topic, so we can handle it with ease. And then we have lastly international finance. We'll learn about the world of finance. We'll learn about how international transactions work. All right. So overall, one of the largest topic in your syllabus, but exciting from knowledge perspective. Except one topic, which is corporate restructuring, which is little dry and boring, but scoring, right? It can be boring, but as long as it is scoring, it's okay, right? It's okay. At the end of every topic, we will look into the questions and we will also see how many of such questions we are able to answer. You need to keep a track of your own efforts and your own performance. I want all of you to keep a track of your own performance, how many you have been able to answer, because that helps us understand how focused we are, and it also helps me understand how many of you were actually able to understand the entire topic. So it's like a performance evaluation for me and for you. So towards the end, I want all of you to solve questions and keep a track, and of course you have to share how much you scored. I can guarantee you that if you have been able to focus throughout the class, in each of such question session, you will be able to score at least 60 to 70%. At least 60 to 70% if you have been focused. All right. But anything less than 50 is not good as per me, but anything 50 and above in the first reading, if you are able to score, I think that itself is great. All right. So don't over expect that, every time I should get 100 out of 100% score. No, it is not going to be possible. But anything above 50, 60 is decently good because we have just read it for the first time, right? But anything above 70% is wow for the first time. All right. I am telling these things because I want you to keep expectations right. Sometimes we over expect out of ourselves and just get demoralized with our own efforts. You may be doing amazing, you may be doing it, right. But just because you don't know the right expectations or you have not set the right expectation, we just to put a lot of pressure or just get disappointed by ourselves. So I want to make it clear after the class, when you are doing any topic, any questions, 50 to 60% is good in the first go. Anything above 60% is amazing. Anything above 70% is wow. All right, wow. And I can tell you, if you continue those efforts, you will touch 80, 85%, even 90%. 100%, yes, you can and you should. But first, let's touch 80% because that is what I always target. All right. Let's get started with the first topic today, financial risk and return. All right, let's get into this. So, first one, topic 1 of 6. What does it mean? It means there are total 6 topics and this is the first topic, financial risk and return. Before I go further, let me also explain section 2B means it is part 2 and section B. One more thing I want to explain before I go further is the page number design. All right. So page number, when you see, you will see that there is a specific number which is mentioned. It will be mentioned to be, then 1 and then some number. So 2B means section 2, topic B, and part 2, section B, and 1 means topic 1, and this is the page number. So whenever you get confused, check out this, what I am teaching, and you will be able to understand where exactly I am, in which page. All right, you will be able to understand. All right, fine. So we are going to get started. This is the writing pad which I am going to be using, where I am going to write everything that will be shown on the screen. In case you have any question, you can write those questions in the chat bot. I will answer them at the right moment. And in case I have not answered, please don't write again, sir, can you answer my previous question? No, your previous question is gone somewhere. You need to write that question once again in case I have missed out. In case I have again missed out, I would, regret that, but I would expect you to write it once again in case I have missed the second time. In case I have missed the third time also, my apologies. I shouldn't be doing that, but when a lot of people ask question, I may miss that. In that case, you can ask me question during the break. All right, I'll give some time during the break, please ask me, or I will stay back to ensure that your questions are answered. All right. Ensure that all your questions get answered while you are attending the class, and any doubt, anything that you have while you are revising, while you are doing something, you are welcome to ask those questions once again in the next class. All right. And like this, we will enjoy this journey. All right, financial risk and management. Let's give a brief introduction about this chapter. Financial risk and return are foundational concept. What is risk? What is return? A foundational concept. In fact, this is the most important concept in the entire corporate finance and investment. Risk refers to the uncertainty associated with the return on the investment. Whatever you invest, there is always a certain portion of risk, while return represents the gain or loss on an investment generates over time. Understanding the interplay means the interplay between risk and return between these two elements is crucial for making informed investment decision. Let's understand this. Suppose I tell you this is the first floor, this is the second floor, this is the third floor, this is the fourth floor, and this is the fifth floor. All right. Suppose I give you a very stupid idea that if you jump from first floor, I'm going to give you 1 lakh. All right. If you jump from second floor, I'm going to give you 2 lakh. If you jump from third, I'm going to give you 3. If you jump from fourth, I'll give you 4. If you jump from fifth floor, I'll give you 5 lakh. Why am I doing that? In any floor, I can tell you 1 lakh is what I will give. Suppose I tell you jump from any floor, I will give you 1 lakh. What will all of you do? Will you jump from fifth, fourth, third, second, or first one? Which one will you all jump? You'll be like, you will always jump from the first floor. Do I need to teach finance? You already know finance. All right. You already know finance. So you will all try to jump from the first floor, because from any floor I am giving you the same reward. Same return is coming. No matter what level of risk you are taking, same reward is coming. So you will always try to take least amount of risk. Yes. If the rewards are same, you will always try to take the least amount of risk. So to make it attractive, I have to give you higher returns to help you take, or to motivate you to take higher risk in life. Do you agree? So I always want to make you take higher risk and then give you higher return. All right. And that is why you will find all those investment options which are more riskier gives you higher returns. Example, fixed deposit and share market, which has more risk involved. So naturally, share markets have lot more risk involved, and that is why share market gives you much more return than what fixed deposits can give. Because it is more riskier to invest money in stock market. Now, stock market and startup, seed funding, the business idea is there, and then you are putting, which is more risky, stock market or a startup? So naturally, startup will be a lot more riskier. Which will give you higher returns? Definitely a startup will give you higher return. All right. So higher the risk, higher the return. Now the risk can be divided into two parts. All right. The risk can be divided into two parts. There are two types of risk. One risk is called pure risk, and the another risk is called speculative risk. Now what is the difference? Speculative risk. One risk is called the pure risk. Pure risk means if this happens, it can only and only give you losses. If this risk materializes, it can only and only give you losses. It can never give you profits. For example, fire, flood, all right, any natural calamity, some accident happened, it is only going to give you losses. You will say, sir, insurance company can compensate us. Yes, insurance company can compensate you, but through insurance money, will you earn profits? No. You suffered a loss of 100,000. Insurance company will give you exactly 100,000 or anything less than 100,000. But more than 100,000, insurance company is never going to give you, right? So these risks are those risks which can only and only give you losses. Then the next type of risk comes. Which is called speculative risk. Now, what is speculative risk? Speculative risk are those risks which has the potential to give you gains or profits, or it can give you losses. All right, it can give you gains and profits, or it can give you losses. All right. For example, stock market. stock market investments is called speculative risk because it can give you gain or it can also give you losses, right? So these are called speculative risk. Which page number am I in? I am on the first page of section 2B. First page of section 2B. All right. So pure risk is defined as a chance that an unwanted or harmful event will take place. Pure risk yields only and only losses. That is what I want you to remember. Whereas speculative risk can give you return or no return or loss. It can give you gain or it can give you losses. All right. Example, any business that you start, it can give you gain, profits, or it can give you losses. Now, before I get further, we need to understand what are the different types of financial risk. When we invest money or when we plan to start a business, what all financial risk can happen. So the first risk is the credit risk. We have given money to somebody, we have invested money, or the bank has given loan, you have sold goods on credit, and the person does not repay you back. That risk is the biggest risk because your entire money is gone. If you sold $100 goods and your profit was suppose $20, then you have sold it for $120. And if the person gives the money back, your profit is only 20. But if the person does not give you money back, then your losses is not 20, your losses is 120. That is 6 times your profit. If he had paid, you would have earned only 20, but if it does not pay, it is 20 into 6, 126 times more loss you suffered. That's a very big risk. Then next is foreign exchange risk. Exchange risk means risk where currency fluctuations happen. For example, dollar to INR. How much is the dollar to INR? It was at one point in time 45, then it became 55, then it became 65, 75, and now it is running at 85. In the last 10-15 years only, this much double fall has happened. In the last just 10-15 years, double fall has happened. More than 100% fall has happened. It looks like that. This is called exchange risk. If you had borrowed money, $100,000 some 10 years back, then you borrowed 100,000 into 45, you borrowed 4,500,000 or 45 lakhs. And if you have to return today without any interest, you will have to return $100,000, and at what price? 85 lakh you will have to return. You borrowed 45 lakh. He said, don't pay me in interest. He was your friend. You just give my $100,000 back. You wanted to return $100,000 back, but how much you landed up paying? From 45 lakh, the same money became 85 lakh without interest. Imagine if there was interest attached to it. That is what is exactly called foreign exchange risk. You took 45, you have to return 85. You suffered 40 lakh loss in that foreign exchange risk. Interest rate risk. Interest rate risk is when the interest rate fluctuates in the market, the returns also gets a hit. You invested at a different interest rate, but interest rate changed in the market, because of which your returns also changed. That is called interest rate risk. Then we have market risk. Market risk means risk involved in the overall market. Political situation is bad. There is uncertainty in the market. There is a financial instability. There is a war going on in the country. All these are market risk. When you invest money in the market, you are always exposed to market risk, which is beyond your individual control. Then there is an industry risk. Any industry can face any challenge at any point in time. If you are invested in any industry, they can go through certain risk. And then there is a final risk, which is called political risk. If there is a political instability in the country, then this risk will be very, very high. And that is why you will see most companies would not want to invest money where there is a political uncertainty in that country. Then returns. Returns means the amount of money that the investor makes. Now, this return is an overall word. We don't call it profits. All right, profits are a little different than returns. Returns is a word which is used from investment. How much investment you have done and how much profits you have made from that investment, that is what we use the word returns or returns on investment. Now, investment can be of many types. Investment can be on equity, investment can be on gold, investment can be on land, building, properties, investment can be on fixed deposit or share market. There can be many different types of return. Each returns are different and their computation is also different because of the nature of the investment. I will talk about it as we progress. But the simplest example to calculate return is this. P1. What is P1? I will explain. So, rate of return. What is the rate of return? So, P1 minus P0 plus D1 divided by P0. I don't want you to remember any formula. I want you to understand the formula. You will never forget. For example, let's say you had invested $100 in a company. And after 1 year, company gave you $120. The value became $120. So how much did you make money? You have to keep answering every question because I don't believe in memory. I don't trust memory. I trust logic. All right. So you have made 20. So when you want to convert this into percentage, it will be 20 divided by 120 or 20 divided by 100. This confusion I always had as a child. So it is always the return divided by how much you invested. It is always the return divided by how much you invested. How much did you invest? Did you invest 120 or did you invest 100? So you invested 100. So it is always going to be return divided by how much investment you had done. Alright. So, and plus, suppose you had invested 100, it became 120, you got 20 and company gave you some dividend. Company gave you some dividend. Suppose company gave you $5 dividend. So total return you got is 20 or total return you got is 25. How much total return you got? 100, 20 or 25. So you got 25 as a total return. Now in finance, there are certain words that we use to denote certain things. For example, when you see a word P or P0, P here denotes price and this 0 denotes the year. Alright, and always whenever you see the word 0, it means now. Now means current year. Alright, now means current year, always. Or it means now. Now means today. Alright, so when you see something like 0, it means now, right now. Alright, or year 0. Alright, what we call year 0 or current year. When you see P1, it means year 1. Alright, it means year 1. Alright, or 1 year from now. Alright, comfortable? So this 0, this 1 denotes year in finance. Wherever you see, it denotes that word. Alright, fine. So let's convert whatever we have learned into a formula. Suppose I want to calculate what is the return that I have got. So return would be equals to I invested $100. Today's value is $120 after 1 year and plus what dividend I got. So this is my total return. If I want to calculate percentage return or rate of return, then I will divide it with how much money I had invested. Comfortable? How much money I had invested. Now let's convert this into a formula. So this is the price after 1 year. So I call it price 1, P1, minus this is the price now when I invested money. So this is called P0. And this is the dividend. Dividend I will get the moment I invest or after 1 year. When will I get a dividend? The moment I invested money means in year 0 or I will get in year 1. When will I get dividend? Keep answering, keep answering, keep answering. I want from everyone. More you answer, more confident, more understanding, more clarity, lesser efforts at your end. So definitely it will be after 1. So I should call it D1. I should call it D1, means after 1 year I am going to get divided by P1 or P0. Very quickly, divided by P1 or P0. What should I put? So I should put P0. This is my formula. This is my formula. I don't want you to memorize any formula. Keep it in mind as we do. And what does D stand for? D stands for dividend. Alright, D stands for dividend. Dividend in which year? After 1 year, in the future. Alright, D stands for dividend. and after 1 year. All right, comfortable? Will you remember this formula? So this is the rate of return formula. Fine, good. So this is the formula for rate of return. Whenever I say 1, it means in the future, expected, because expected means it may happen, it may not happen. It is expected. How do I know future so certainly? No, I cannot know future for sure. It is just an expectation. But current market price, I don't need expected. I know the price right now. Similarly, this dividend, am I sure? No, expected dividend. All right, expected dividend. Now, let's come to the next part. We'll keep growing slowly. We'll keep understanding all concepts and we'll keep becoming better and better and better. Expectation is we should progressively grow in our understanding. All right. And as we grow, I will increase my speed as we progress. All right. For now, I will keep it very slow so that we understand. But as we start understanding, I'll keep raising my speed. I want you also to keep raising your speed of understanding, because I want your understanding, your thought process to be fastened so that you are able to handle all the questions within the defined timeline. There is no excitement in not being able to answer the question in spite of the fact that you knew all the answer, because you were slow in the exam. If I do not know a question and I was not able to answer a question, it's okay. But I knew the question, I knew the answers, I was well prepared, but I was slow in exam. That is not acceptable. Not acceptable to me, and it will certainly be not acceptable to you also. So I will keep raising my speed, not because I want to finish everything fast, but I want you to be trained during the class in the next 6 months to speed up your thought process and the way you answer questions. I'm sure all of you understand the objective. All right. Then the relationship between risk and return. I have told you the relationship is a positive relationship. Now, what do you mean by a positive relationship? Positive relationship means if this increases, this also increases. This is called a positive relationship. If this increases, this decreases, this is called a negative relationship or an inverse relationship. Inverse relationship. If X increases, Y decreases. Inverse relationship. X increases, Y also increases. Positive relationship. Is there a relationship in both? Yes, there is some relationship in both. But one is positive, one is negative or inverse relationship. Risk and return enjoys positive relationship, which means if this is going to increase, then this should also increase. If the risk is more, the return has to be higher. If the risk is less, the return will also be lower. So higher the risk, higher the return. Now, can I say higher the return, higher the risk? Yes, you can say that, but a viable way to call it is always risk first. So we always say risk first. Higher the risk, higher the return. We never say higher the return, higher the risk. No, that should be. That should be, but we don't call out like that. All right. A simple relationship exists between risk and return. The higher the potential return, the higher the level of risk involved. All right, involved. Investors are risk averse. Risk averse means they don't want to take risk. If suppose I tell you, I'm going to give you 10% return, your risk is going to be 5. I'm going to give you 20% return and your risk is going to be 5. Then you will always choose this one. Right? You will always choose this one, because both has same risk, but it is giving higher returns. All right, it is giving higher return. I am telling you this is going to be 10% and risk is 5, and this is going to be suppose 12% and risk is, or let's say 10%, exactly 10%, and this is going to be 4 risk. Which one will you choose? A or B this time? A or B? Which one will you choose? So 10% return, 5 risk. 10% return, 4 risk. 4 risk. So all of you will choose B. All of you will choose B, because by nature we avoid risk. By nature we try to avoid risk as much as possible. If we both are giving same return, I will choose an investment which has lesser risk involved. because we are risk averse by nature. They are willing to undertake additional risk. You are willing to take more risk only if there is an additional compensation by way of additional return. And that's why companies with higher risk involved gives you higher return on investment. The opposite is also true. If you are taking less risk, you will get less return because the relationship is a positive relationship.